Hello, 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 everyone. How is everyone doing? Nice little shake and bake. Was hoping everybody would be okay, but my phone started lighting up. Started getting multiple people saying they're getting their face ripped off trying to short this. Which this is why we've been doing some more stuff talking about market internals, and there was a lot of clues, especially after this little pullback. There were no shorty shorts. And then I want you to think about this, but we'll get into that in a second. Let's see who's here. By the way, before I do get into this is why we're going to do some more YouTube membership options for like things like this will be for people who really want to support the channel in the future and really want to learn. And therefore, there'll be no ads or anything else on it. This will be for the benefit of the people who want to really learn price action and learn how to improve their trading. So let me know your thoughts on that. Was getting ready for my workout, but this was more important. Now we should get a little calm going into European close. Lunchtime. Good day, Davey. Did I get Martinez with WTF? Hope no one stayed short. Ripped through the 35.88 previous support, becoming resistance like it was nothing. That was another key. And what were these? What were these, everyone? This turned into some decent momentum bars. Little pullback, and we'll go through that also. Then what was this? Because this, could it break down again? Let me take this off for a second. Remember, use your harmonics. Nice little pullback to the pause area. Could it even get back to 52.62.5? And I've said, what's the play for this? It's the breakout play. Because it couldn't even get back to 50 to 62.5 after this little up move. I've covered this, not recent. I know I covered this multiple times. But this was the key pullback area, and if it stays sideways, watch for the breakout play. Now think of this psychologically. Everybody who got short, and this was a 5-minute bar only. All right? So where did a lot of people get short going into the open? Here. Because this was hard to get short, and there's a lot of slippage on this. So where did a lot of people get short? Down here. Comes back up here. Remember also we touched, and I don't normally touch on this, I'll probably have to do this more, but you remember the VWAP's an area, and I said watch for it to hold above there, held, and then you get the breakout play with the running VWAP. But this was the key thing. And then momentum. Those were a couple signs. Now I want you to think about this psychologically. So unless you got short up here right before the number or managed to jump on it here, what happens with this? Everybody's underwater. All right, so the people still short down here, what were they hoping for right here? What were they hoping for? Remember I said watch were the Dow and the Russell able to break their key lows? No. What was this? So, all right, if you're short, what are you hoping for here? You're hoping for, okay, this was the opening little rally. We're gonna go and validate my shorts. What happens here? Oh crap. And you can see it right here. We all gotta cover. Then what happens through, you had this key little channel. You start getting through the middle. Oh crap. Now everybody who's even short from yesterday afternoon, you start getting into the European session. If you're short for anything, we're taking all those out. And we're going on to the other side. So now your key support, 36.27. Next major support, 35.85 area, 35.87. Get your harmonics back on. And let me switch the color real quick. So, this is my key pullback area. Not only do we have dueling harmonics here, we have the at least the 5 minute, I mean the 15 minutes coming in now. We're at lunchtime. So this is my key support level. This is a pretty major support level. 36.26 in the area of that going into lunch. Let's see where we sit. So, and I got something else. Hey, options 22. Welcome to have you. Hey, Gary. Oh, who else said so? Did Waka make it out alive? We have to see. Bobby Everwright or P Dub. I saw your comment also yesterday or earlier. I think you should be on this afternoon's live stream and ask Bob. You can ask Bob to your to his face. Let's see. Also, the feedback I was getting was this was the last opportunity. This was literally the last opportunity going into year end. No capitulation. There was, hey, this was buying. Also, let's get through a couple other things. VIX, which I didn't touch on this morning after live stream, but what happened during even the late live stream? We had the market open. Immediate gap fill. This was pretty bullish VIX, especially when it couldn't break down. You had the little counter rally. And what's this? So if you're trying to short with the VIX collapsing after the CPI number, reiterating price action, what's so funny is, no, this is not capitulation move, but yes, can this be a short term, at least a short term top? Yes. And we'll be going into the next few days. We still have a gap left behind, so still watch for this VIX fill with the gap down to the 31.35 area. Then really pay attention to 28.50, because if we get the collapse below 28.50, you could see a sustained push higher. But that was your short-term stuff. The VIX rolling over with buying pressure coming in. If we look at the tick, which we were talking about this morning, we had the sell programs. We had this little one spike back down below 1,000. We've hit another one recently. That's why I'm watching for the lunchtime pullback now. But other than this, what was the trend of the? Look at the trend. What was the trend here? And then what? These are massive buy programs going off. And by the way, these are topping patterns. When you start getting ticks above 1,500, major short-term topping patterns. That was not when you want to look to buy. This is when you want to look to aggressively raise stops or start covering your longs, because that's generally getting into closer to the end of moves than the beginning. But here was your short-term trend. Then it's leveling out. Now we're going into some profit taking, I can tell you right now, because we're getting some selling pressure going in. But this was morning buying pressure, especially after it could not break down again and then broke out, and you constantly saw positive tick. This was a drastic shift. So when you start seeing these, and look, some of these pullbacks they couldn't even get back to zero in here. That is massive buying pressure. So, I mean, you have to sort of zoom here. I can spread it out more. But it's easier to see also real time when you start seeing, okay, push up above 1,200. Can't get back to zero. Holding up here. This is for a period of 15 minutes. It couldn't even get back to a neutral tick. That is massive buying pressure. You don't want to be shorting into that. You want to be riding any longs. If you missed opportunities for longs, you want to be sitting on your hands. Also, let's review a lot of things, because many times it's also keeping your money. Gap harmonics. What happened here with the spiders? Close above the 62.5. If you flip stuff around, then just to gauge, I got to re-anchor stuff. If you just to gauge the pullback level, we didn't even get down here. So you got the close above the 62.5, could not get another breakdown play. What's the play? You're definitely not a short. The play is at least for the gap fill. at least. So there are lots of clues out here to at least not get short. The cues were a little harder because this candle, here's your 5 minute. It would have to be done on a breakup, but you see the little return to the 50, 62.5 where we watch for the pause. And then, yes. Now, I know. Was this a potential double? Yes. Did it even trade below the peak? No. And there were even shorter term, like 1 minute micro doubles going into this. There weren't many things that triggered to the short side. I'll be very cautious. I'll tell you something. There are times, yes, you can get away front running stuff, but when you're trying to go against a strong tick, a strong VIX, do not front run patterns. Do not. At least wait for them to confirm. You see, this one never confirmed or triggered. Yes, it was a potential. And yes, it was valid. And yes, I was keeping an eye on this. Why? What was this level? The 62.5 of our gap harmonics. So if it was going to stall out here without getting a close, let's pretend. Let's go. I wish we could have a Wayback Machine. So at some point it looked like this, right? Let me just take off the additional moving averages and stuff. At some point it looked like this. All right, well, hey, we could be stalling out above the 62.5. Would I be shortened here? No. What would be the play? The play would be the play back down here. That would be a breakdown play. And then what would this have done to all these bulls? Trapped. Trapped. Unless you bought this breakout. Trapped. Then we would have probably seen in the first and second targets, right in the move that started it. Third target in the wicks. So this was a potential. Did it ever trigger? Did it even confirm? No. This, once you saw this start unfolding, gone. Gonzo. No more. The trade's gap fill. Hope that helps people. And no, not a double. This was not a double. Again, if you're using this Y, at least if you're not in something, this is fantastic time to practice. Let me take out these other blue lines real quick. What is this now? This is where you can practice. What do we watch for? Now we're going into lunch. This is where I start watching for the bigger pullback. Still, I'm going to watch for more of a pullback here, but where did it stall out? This is where it's great to practice, even if you're not trading these little micro. All right, we got, it's the inverse of this. Remember? Boom. What are we watching for? Seeing where it pulls back. This did not get to the 52 and 60.5. This did. So going into lunch, we don't have a potential double, but we're watching, especially if you tried to buy a dip here and didn't notice a pretty significant change in the tick. You're at least being, oh, we can't get above the 62.5. I better at least be raising stops because we could turn around and reverse. Now, this is a very scalpy play. The whole reason I'm showing this is not to try to tell you to trade little micro time frames in here. It is to show you how your harmonics play out. Come on, give me my other harmonics back. There we go. All right. So now this is the key area I'm watching to see, and it's an area around here. But you really start breaking back below about 36.10. It could get interesting back into this clear path going into the close. You hold up in this area. I'm going to be watching for a retest of the high area going into, especially after 2 central. If we use our single candle harmonics, take these off real quick. Single candle harmonics. What would be the super bullish continuation pattern? A close above 36.53.75. Why? That would close in the upper 12%. The second most bullish play is 36.32.25, where it's still holding above now. Then we get a pretty strong reverse, at least a pretty high probability of a reversal candle. And we'll cover then how to look at that going into the close. Oops, I should have done this. There we go. Also, another clue I forgot to talk about. What happened with the dollar index? This is very bullish. Dollar index. Breakdown. This was actually a valid double. Dollar index breakdown, bullish for equities. So there was another warning sign if you missed the other things. Just wanted to point out that. Really keep watching though with the yen. Still for potential intervention move. This is still holding up very weak yen still. By the way, Christoph, thank you for being here. This was not short covering. This was not from anything I've seen. This was not a short covering rally. This was actually buying pressure. Options, face and arm. Is it merely a flesh wound, though? Options 22. Merely a flesh wound. I'm just catching up with comments. Hey, we're actually having a lot of people for a midday live stream. Hey, Eric. I'm going after... I can't stay on all day, Santer, and I'm trying to review stuff so you can watch for stuff. What I'm pointing out is the stuff so you can watch for it real time. All right? And the one thing also, I've talked about this repeatedly, is momentum bars. What don't you want to fight? Momentum bars. So 2 key lessons I want people not to fight: momentum bars. Yes, there was potential shorting in here. It was potential. It could have been valid should this trigger. But once you get momentum bars, do not stand in front of momentum bars. You're better to stand aside. By the way, if we do break down below this key support and we continue going into the close, I'm watching, like as I said before, 35.87 for a key area. Number 1 trading rule: don't lose money. Well, you're going to take losses. Everybody's going to take losses. Okay, but don't take big losses. Don't take catastrophic trading account losses. All right. For example, this is something I'll do a whole little stream on it. I wish I could. Can I make this bigger? I don't know how to make this bigger in this silly program. Oh, maybe I do this. There, I can do that. Here's why. Here's why. Look at this. So 5% loss. Let's even say you take a 5% loss on a trade. It only needs a 5.3% gain to get back to break even. This is what I was talking about. You start taking your bigger losses, whether it's on one or multiple trades. Look, even this, 20% loss, 25% gain to get back to break even. That's manageable. You start getting down here, 35% loss, 53% gain. That's getting tougher. 50% loss, 100% gain. 60% loss, 150% gain to get back to break even. 70% loss, 233% gain. That's why you gotta limit your losses. You gotta, just something to keep in mind. Who needs a workout? Well, it helps me not go on a major rant strategy. You don't want Mike ranting all the time. Again, I'll say it again. It's even in the headline. This is not capitulation. This was not capitulation. I know there's going to be headlines all over the place. Capitulation. This was not capitulation. There was not even selling pressure follow through on the open. This was not capitulation. If you just look at this was a gap down like in the spiders and everything. But if you look at the daily chart, there was no follow through. This was the essentially buy the low on the open and ride it back up. Fortunately, the final harmonic just barely missed, or the harmonic area. By the way, no doubles here. No doubles to trade off of. Well, Ninja Max, I don't think you guys making any money from just a waste of time and money. Well, that's your viewpoint. But there's a lot of people out there who are making money from this. I started in 92. So tomorrow capitulation? Well, unless we were to wipe out today's price action and worse, there won't be capitulation tomorrow. We are technical analysis traders, and there'll be times of making money. There'll be times of taking losses. You keep your losses small. Oh, Waka Waka. You're back, Waka Waka. Get the likes going. A successful manager, 30 years of experience, taking out of his day to teach you. I'm just trying to show you guys because this is a great lesson while it's fresh in people's minds to not go counter trend insane on a day like this. This is not a day to fight. And by the way, I'd rather now miss a backfill play than a risk going against this move. Especially, again, this can be where are we on the weekly? Where are we? What? We're back above the 200. So as the 200 hold, unless we have some major selling tomorrow, we do have retail sales and everything, but this, based off this buying pressure, now we start breaking back below about 35.80, it'll get interesting tomorrow. We didn't get to the capitulation level, though. The play should be Mike streaming from opening to close, and how am I going to do anything else, Martinez? And I would have to charge a fair amount for that because I wouldn't be doing anything else. Yes, the bear market's not changed for the long term. This could be a pretty substantial short-term bottom, though. You want the levels on the Qs? Well, your key support level is now 260. And 260, 192 on any backfill, that's your key support. 260, 192 to 260. Remember, and right in the middle of this is the key low from Tuesday. So this would be my, if we do break down anymore, this is my key support zone. That will take now a lot of selling pressure to get through because we are back above this key stuff. So you've now got all this support that was broken, was very weak resistance, and with the buying pressure now back to support. So these would be on any pullback. That's your major level. Your next, let me just see here. It's still rallied into this. So on a closing basis, if this can get a close above 267, that would be extremely bullish for the Qs. Let me give you also the 12.5 harmonic on this is 267.65. The 267 level, this 267.26. So a close above 267.26 and especially 267.75 would be very bullish because then it will have retaken the breakdown zone. Other than that, I just would use the single bar harmonics. The only way I will be retargeting the lows is if we get a close back below 260. That is the only way. Then that's on the Qs. The 260s on the Qs. With that, I think that's about. Oh, thank you, Legion Reaver. Thank you for the super chat. Thank you so much. Again, everybody, only riggers make money. What does that mean? That is actually an untrue statement. That's a completely untrue statement. So, you know, I'm going to call it a naive, untrue statement. Only riggers make money. There's a lot of successful people that make money trading. A lot. Only riggers may make money in certain markets, like some of the crypto space. This market's not rigged. You'd have to have so much money to rig this market, especially the S&Ps. That's just a very naive statement. Yeah, Daniel shouting out Legion. I wonder if the market can continue rallying with those figures coming out. Banks aren't likely to post much more positive things not tomorrow neither. I think the next big thing will be some earnings surprises. And we are getting into more instability. There was very little downside liquidity this morning. So if we do, I think it's going to take some surprise geopolitical event, but that's the next thing. Then that we can't really predict. So on a rally mode for continued follow through, and we'll judge things going into the close. That's where we want to see how this closes today. That's going to be very informative. To gauge the plays, but this is a market you don't want to not have stops in if you're trading it from the long side, even in the short term. By the way, other stuff, just to do the full wrap up, really nice bounce back. Yes, the double is still in play, although with potentially the 75 baked in for this one. I'm just actually recapping some stuff for my own edification now. So I'm thinking out loud because I like to do a preliminary. And remember, we were watching for some gap fills. So relative strength, you know, you have the mega caps except for Amazon because of slowdowns with stuff. Remember the banks also. Banks announcing tomorrow stock sectors. Of course, energy have not, but financials with earnings tomorrow will be interesting. But this, look, you only have one sector down today. This would not be a market with this broad-based support. I would not be wanting to go short into this market for this afternoon. This is pretty broad sector support, pretty broad support across the map here. All right, the notes. This turned into sort of, okay, we're shrugging it off. The yield curve, though, still hanging out down here. So that's no reversal there yet. And a very strong pullback after hit. Look at that, 4076, little harmonic. That's why we follow this stuff. Yes, the double still is in play, just like the double bottom on the futures is still in play. The double top on the yield is still in play. Do I think it will happen? No. Not if we're going to do back-to-back 75s. But it still is in play. Redskins. Who's talking about manipulate? You don't manipulate the market. I don't want to be in a market that can be manipulated. And with the size of the S&P, if you think, or unless we're getting into the they category, if you think they're manipulating the market, you know how much money you need to manipulate the S&Ps? This is not a Ponzi scheme market, Ninja Max. It's nowhere near a Ponzi scheme. A lot of the cryptos were Ponzi schemes. This is not a Ponzi scheme. It actually does. Now, there's a lot of naive people who've got their rears handed to them because I'll touch on what Sterling was saying. You know what? They got sucked into the meme craze. So there's a lot of people, you want to talk about even stupider craze, was the NFT craze. You want to talk about Ponzi schemes? Go study the crypto space. It's still going on. But you can't say that with the market, the broad market. That's just a very inexperienced, naive statement. With that, just going to check in on some things for my own stuff before we wrap this up. Ticks bounce back. Ticks actually holding up besides this little pullback move, still holding up. So if you're watching for the tick, I'd watch for, if you're going to get selling pressure in this afternoon, you're going to have constant ticks down here. Remember, it's thinner, it's going into lunchtime, but you're going to have to start seeing, in order to get some decent selling pressure, have constant ticks down, spiking below 800 again. VIX, just basing out going into lunchtime. Just want to check the next key areas. We still have a gap fill, by the way, from the VIX. So I'll be watching for that this afternoon, for that full VIX pressure gap fill. With that, I hope everybody has a fantastic afternoon. Thank you for joining me on the impromptu midday live stream. And with that, I will be back with Bob after the close. So P-Dubs, I hope you are here. to ask Bob your question. With that, I shall talk to everyone later. Bye.